Along with most of the major cement companies that delivered a robust set of results, Ambuja Cement too delivered an operationally strong, in-line set of results as far as the quarter gone by was concerned. Now, talking about the results themselves, Ambuja Cement, unlike its peer ACC, managed to meet the expectations of the street. The revenues went up by almost 14%, coming in close to the 3,470 crore mark, aided by the fact that sales volume went up almost 8%, a little over the 7 million ton. Now, when you're talking about the realization trends were quite strong as well. The EBITDA went up by almost 40%, aided by the fact that the company had a MSA agreement, a master supply agreement with ACC that helped the company control costs quite significantly. Also, when you're talking about the EBITDA margin rose by over 350 basis points. So when you're talking about the profitability, the bottom line surged ahead by almost 41%. The company said that the capacity utilization trend was at close to 90%, and the company said that the volume of that figure went up by almost 8%, driven by the fact that there was strong demand from rural housing as well as tier 2 and tier 3 cities that actually helped. Now, what they're saying is that there was a higher share as well as of specialty products in the total revenue mix was concerned, and the company believes that the key triggers going forward as far as demand is concerned would be demand from the affordable housing segment, demand from infrastructure spending aided by the government, as well as rural development programs that are happening. When you're talking about Ambuja as well as ACC, there was a slight overhang given the fact that the master supply agreement pact was coming to an end. However, both ACC and Ambuja have gone ahead and renewed the master supply agreement pact for 3 more years on the same conditions as they were existing. Now, when you're talking about what Morgan Stanley had to say, they maintained an overweight stance in the stock, a target price of close to 300 rupees. They're saying significant acceleration in volumes was seen under the master supply agreement with ACC in 2020. They believe realization trends were quite resilient. CY20 volumes, despite the fact that they were 6% lower, it is slightly better than anticipated. Jeffrey says that despite an inline volume, realizations were slightly ahead and there was a slight miss on cost, and that is why they say that the results were broadly in line. They are saying that Ambuja Cements managed to grow in line with the market. The outlook on volume gets slightly better going forward as the North India expansion that the company has undertaken would be coming to fruition in 2021. They believe they've reiterated their buy stance. What they're saying is that the company outperformed its subsidiary ACC, however, has marginally underperformed peers like Ultratech, Shree Cement and Ramco. They believe that Ambuja Cement at this point of time has managed to maintain its market share, but they believe valuations are something at this point of time that they would need to be slightly worried about. Given the fact that both ACC and Ambuja have delivered good set of results, Jeffries believe that the union budget would be ending up giving an impetus to the entire cement industry, and they believe domestic manufacturing, infra development, PSU privatization, focus on healthcare, these are some of the triggers that could actually aid volume growth as well as spending as far as the entire infrastructure and construction segment in India is concerned.